but B, this represents severe vulnerability in the powder keg when it goes off and the mass calls get bought, jacking the implied volatility premium, making the fail to deliver reset dramatically more expensive and complex to write while sparking off a short squeeze. Enter vicious cycle. Well, holy smokers, folks, you gotta be flipping my flapjacks. It is official. The WSB community has found the chef, okay? Wall Street Bets on the chef. I received a text message last night from a friend, sends this over, and my mind was blown, okay? And I'm about to go through everything here with you guys here today. Now, most people watching this video are probably long-term investors of the chef, okay? That's my audience. That's a lot of us, like, we see eye to eye, right? We're usually in stocks for long-term. However, what we're going to go through today in this Reddit post, right, is some pretty crazy stuff around some short-term things going on, okay? And I also thought this was kind of interesting. My friend says, the work that those Wall Street Bets guys do is extensive. They're not amateurs. They have access to Bloomberg Terminal, Thinkorswim. I bet they're professional investors from hedge funds that use Wall Street Bets crew to pump up volume behind their ideas. Interesting, okay? That's all I'll say about that. No one really knows for sure what's going on there. But I will say, you go through this post we're about to go through, and it's some higher level stuff. Yeah, I hope you enjoyed this video as always. I hope you enjoy me sharing this with you guys. All I ask in return is that you smash that like button for the YouTube algorithm. I appreciate you guys as always. If you haven't got to check out Hungry Bowl yet, definitely check it out. It's on iOS. It's on Android. People are absolutely loving it. We're just going to keep making that beast better and better and better, tracking your stocks, cryptos, reading our daily newsletter, earnings calls, got SEC reports coming very soon, as well as live tick data, so much more, okay? And also, brand new course just out. If you want to check that out, how to invest like a pro in 24 hours or less, check out the pinned comment down there. I repeat, the pinned comment down there for that brand new course. Hope you guys enjoy a lot. And without further ado, let's get into this. Alrighty, folks, let's get into this post, okay? TTCF, the clock won't stop. Oh, man, okay, this was posted a day ago. Yeah, you had me excited already. The clock won't stop, okay? Hello again. Up here is a tightly wound time bomb. TTCF, Tattooed Chef, is a wildly asymmetric bet with an options IV that is drastically, which is implied volatility, that is drastically underpricing the risk of trapped shorts closing one another out with a fun catch. The higher IV goes, the more shorts lose. I've been watching this the past 2 weeks and now have some hard examples of shorts using illegal methods of delaying the inevitable, an explosive move up from the broker closeouts, and spiking short constraints. I'm confident in the move happening immediately, okay, or imminently. So we'll hit out some hard points ASAP. A quick summary on TTCF: outstanding revenue growth up 52% year over year. I'm not sure, outweighed tax liability loss. They grew revenues last quarter 46%, and then branded revenue 62%. So not sure where they got the 52%. But anyways, short borrow rate spiked to 200 to 300%, one of the highest I've ever seen, they say. Short interest at 61% of actionable float and 37% of entire float. FTD panic reset the clocks are rampant. SEC reg show list limits broker short deal ability. Float constrained to 24 million. Increased implied volatility and price catalyst for short capitulation. Now, some of you would be like, what the heck did half that say there, okay? Don't worry, we'll get more into that. Here we go, a little meme, okay? Short bear, let's reset the clock. That'll work great. Tell the exit strategy, crook dealer. You do have an exit strategy, okay. Part 1 about Tattooed Chef creates sustainable vegetarian, vegan products and sell them to various chains and grocery stores. Think Blue Apron for millennials without delivery costs. Good food, better profits from their 10Q. They're estimating close to 240 million revenue in 2021. They should be able to hit right around that number. Maybe a little beat. We'll see. They have $140 million of cash on hand. Read no dilution concerns. Yeah, they shouldn't need to dilute anytime soon, if ever again, honestly. And they have gross margins of 13%. No wonder institutions increase their holdings to nearly 20%. Honestly, a pretty solid company. CEO's a pretty cool dude, he says, okay? So why the big drop? Turns out there was a tax deferment payment okay, of 47.22 mil they disclosed on Q2 earnings on August 12th. My theory, this is their theory, my theory is shorts were happening for, or hoping, is probably hoping, for a much larger drop. But also turns out the market didn't care since the company has reported solid growth and will continue to. So essentially the stock fell big initially, so I think the market did care at least a little bit, and then it bounced straight back, right? A lot of longs like myself just picked up a bunch more shares for a bunch cheaper. When it was down to $17, $16, like a lot of folks like myself, we're just buying more and more shares, okay? Even after the insiders were allowed to sell in April, the CEO only dropped 2.5% of his entire stake. Q, buy the dip and tightening of the float. Here's where it gets fun. During the small rally last week, back to the balance, cost to borrow increased times threefold. Shorts not only did not close, but increased their positions. AK, all the shorts who opened up are now trapped, okay? And they show some short interest changes here and around some of those numbers and whatnot, okay? Part 2, massive short constraints. A quick look at the options tape can tell you all you need to know about how deep the shorts are. See Part 3. But if you want to see the numbers, here they are. The float, 40 million according to Bloomberg. Institutions, 15.6 million according to Bloomberg. SI, 15 mil. Trading float, 24.4 mil. SI of trading float, 61%, not counting shorted shares. TTCF is, I'm never good at pronouncing this word, so please don't laugh, okay? Peculiar, is that good, guys? Did I do well there, or I need a little work on that one? I'm horrible at that word. Because even in every case of a spiked 100% utilization, the broad availability of the shares to short is a corresponding rally in price, where there again, but this time there's a twist. So in here they're showing you kind of a little chart here on what's going on here. Max utilization 1, max utilization 2, max 3 there. They say, not only do I expect high utilization rally, a 25% to 50% higher than current prices, we now have significant number of added short constraints prompting a higher move. Listing them now, in addition to the utilization HTB rally, we now have 1, a smaller float due to institutional buys, 2, crazy high CTB rate of 220 to 340%, cost to borrow essentially, okay. Number 3, reg show forcing closeouts of recent FTD shorts, and higher occurring losses the higher the implied volatility goes. The excessive short borrowing results in issues with clearinghouses and brokers. Namely, these firms are loaning out shares they don't have. Enter the SEC and regulation show list. Okay, Tattoed Chef showing up on there. Okay, so, essentially we have a situation where it looks like there's some fishy stuff going on from the short side, okay? And it looks like, I don't want to say it could be set up for some sort of, huge upward move. But, when you start reading into all this, it's like, maybe there's something here, okay? Part 3, reset the clock, right? Well, they can try. Let's have a primer. What is FTD failed to deliver in resetting the clock? Periodically, securities become hard to borrow. And when there is large and persistent fails to deliver in the security, end up on the threshold security list. These situations give rise to pricing differentials in the options of the securities, and the put-call equation may appear out of balance, which is in part a reflection of higher borrowing rates on the securities, and we've seen some of that recently. A lot of, kind of releases from, different publications that cover this have been definitely showing that, okay? Reg show requires FTD failed to deliver positions resulting from short sale transactions to be closed out by a specific date, okay? Okay, in English, FTDs are when brokers can't deliver short sales. They normally have to close them on T+3 in order to avoid closing. Short bears are doing something called, quote unquote, resetting the clock to kick the ball down the road before closing out and paying 340% borrow fees. That sounds ridiculous, guys, ridiculous. Now, here's a walkthrough of the reset playbook. 1. Short bear shorts TTCF at 340% cost to borrow and try for a 5% gain YOLO. 2. Crook bear can't deliver the borrowed shares. 3, crooked bear is required to close out short bear on their third day, T plus 3. 4, short bear doesn't like this, so they do a sneaky deal selling calls and buying puts on non-OI options with crooked broker, so they assign them, making it look like they closed out for another 3 days. 5, short bear hopes price goes down before he has to pay the 340% cost to borrow, plus take the loss, so keeps doing this. What short bear is doing is illegal according to this individual. From what they looked into the SEC, what the short bear is doing is illegal. So, in the off chance the SEC ever does anything, here's your proof, okay? And they're showing it here. Now, as far as me personally, okay, and I'm going to give my opinion on what this means for the stock price and things like that. But in terms of, knowing the parameters and if this is for sure illegal, I can't personally say this is for sure illegal or something like that, okay? But what this individual is saying, who they seem decently educated, let's just put it that way, okay? What they're saying is what the short bears here are doing is straight up illegal. And, if the SEC does anything, they have what they believe is proof here of this essentially happening, okay? So, very intriguing there, okay? These resets have been happening literally every day for the past week. So why should you care? Well, the SEC tells us why. Trade A continues to execute a buy right reset transaction whenever necessary, and by the time of the expiration of its original reversal, it may have given up some of the profits in the form of premiums paid, but it has maintained its short position without paying the higher cost to borrow or purchase shares to basically make delivery, right? Read, the longer shorts do this, the higher the implied volatility goes, which equals the longer shorts do this, the more and more unprofitable it becomes. Not only does A, this clock reset point to severe short constraints, but B, this represents severe vulnerability in the powder keg when it goes off and the mass calls get bought, jacking the implied volatility premium, making the fail to deliver reset dramatically more expensive and complex to write while sparking off a short squeeze. Enter vicious cycle. 1, price goes higher, forcing high borrow rates. 2, shorts with high borrow rates try to reset the clock. 3, reset the clock, jacks implied volatility higher, making it more unprofitable. 4, shorts start closing. 5, price goes higher. 6, repeat. Part 4, the play. The run should start imminently. Repeated tests of the $20 to $20.50 range result in huge panic short sells. On Thursday, shorts responded to an attempted breakout by purchasing thousands of deep in the money puts and selling thousands of deep in the money calls for a stupid amount of premium. Didn't work. On Friday, massive share sells tried to defend against another breakout, they say, okay? Implied volatility is low enough to make substantial returns. It would be lower if not for shorts resetting transactions, but it's all good because there's ample ability to profit off their mistake. Here they say I'm assuming that is supposed to say, if you want to see what a short panic looks like, look no further than the walls of bought puts and sold calls shorts placed on Thursday to prevent a breakout. And they're shown, in detail here, okay? Now, and according to this individual, their move is on all-time highs, okay? It looks like they have basically September 17th, $22.50 calls, and it looks like they bought them at around 60 cents. They're looking for 800% return by but if the stock goes to $28 essentially, okay? They also have these September 17th $25 calls. It looks like they paid 40 cents for those. 1,150% returns to be expected, they're saying, if the stock goes to 30. And then here we have October 15th $25 calls. Looks like they paid 65 cents for those. 1,400% returns if the stock goes to 35. Cheers. Edit. Short bears still resetting. Here's today. Let's see if the OI exists tomorrow. Note 1.0 delta, okay? Wow, okay. Oh my gosh. That's a flip of my flapjacks. Let me collect my thoughts here. Alrighty, guys, in terms of my thoughts here, okay, is SEC going to get involved in any of this? Probably not, okay? Tattoed Chef is a $1-something billion company. It's just, it's kind of unrealistic, right? This will kind of fly under the radar, in my opinion, okay? Now, in terms of stock price, here I will say this gets pretty darn intriguing because you have all this volatile mixture, the powder keg, as you call it, right? Which is, pretty darn intriguing from a short-term perspective that all this could, blow up in a massive, massive way, and the shares could spike to some, crazy numbers very, very quickly. And keep in mind, Tattoed Chef is not a huge market cap, so, for this stock to all of a sudden go up, let's say 20, 30, 40, 50, 100%, let's say, 100% might be a stretch, but, let's say 30 to 50% in a matter of a few weeks, it's not out of the realm of possibility. We just watched, literally over the past week, Tattoed Chef go from $16 to $20+. So to imagine it going from all of a sudden 20 to 25 or 28 or something like that, which if it went to 28, I believe that'd be right back at 52-week high, right? It's not out of the realm of possibility. Also, you got to think about it like this, right? Here's the thing with Tattoed Chef. The majority of folks that have been buying the stock are holding it for the long term. Folks like myself that have 7 figures in the stock, right? If Tattoed Chef goes to $28 tomorrow, I'm not selling any shares of the stock. I don't care, okay? If the stock goes to $30 tomorrow, if it goes to $35 tomorrow, I'm not selling. I'm still holding, right? Which makes it for a situation where the buying pressure gets even more immense when the shorts are covering. Then if you also have some longs that are opening up positions as well, and the stock's getting even more attention, it makes for this situation in the stock where it just goes absolutely crazy in a short amount of time, right? And the thing is, there's a lot of people like myself out there that are longs in the stock that are in this to become a $10 billion+ company over the next 5-10 years, right? And so you look at it kind of like, you remember Tesla, one of the reasons Tesla went up so dang much is because there was a lot of fishy stuff going on with the short sales. Covering led to more covering, all of a sudden shorts going long, analysts coming around. There was such a mixture there. But also remember, the core investor base at Tesla are buy and hold. Not like, oh, we're going to make 50% on the stock or 30% and then sell out, right? That's like the majority of Tesla shareholders. Those folks are in that stock for years and years to go in the future. And so if you look at a situation like this with Tattoed Chef, a lot of us longs are in this for years to go in the future. We don't care if it goes up 50% tomorrow. We're not selling, right? I'm not selling the stock. It's like, cool, it went up 50%. I got a bunch more money in my accounts now. Awesome. But it's not like I'm like, oh, okay, now I sell Tattoed Chef or something like that, right? And so when you have that from the long side, a lot of loyal longs who are in this for a $10 billion dollar plus opportunity and don't care if it goes to $2 billion or $3 billion in the short term, it is what it is, right? That's where you get even more intriguing here. And keep in mind, if all of a sudden the stock starts spiking bigger and bigger, it brings more observation to the stock, right? Which, the long-term story for Tattoed Chef is extremely compelling. I know this, and a lot of you guys watching this video know this, right? But not everybody knows about Tattood Chef's in the stock market. I can tell you that much, okay? And a lot of funds don't. And if all of a sudden funds, remember I always said, next year is the year where, funds really start taking the stock serious as their revenues continue to ramp, as the company gets close to profitability, as the company is distributed in almost every store you want to possibly be in, right? Next year is really that year. And so funds all of a sudden, if the situation like this happens, funds start recognizing, maybe start getting in sooner, and it makes for quite a situation here. So anyways, guys, I would love to hear your opinion in that comment section as always. I would love to hear your guys' 2 cents on this. What do you think about all this? I definitely would love to, hear you guys out on this as well, okay? And hope you guys enjoyed this video. Once again, if you want to check out that brand new course just launched, How to Invest Like a Pro in 24 Hours or Less, check out the pinned comment down there. Much love as always, guys, and have a great day.